So I think you're talking about the long-term care insurance.
Insurance, yes.
Yes, and that is true. And I think Josh can probably talk to the insurance part. But to answer your question, really that's one of the things that we do talk to clients about as an elder law attorney is figuring out the best way to structure your assets to pay for long-term care. Of course, you can always private pay by just paying whatever the rate is of the facility, or we can talk about private paying with some supplements like the long-term care insurance, or I think you and I have talked about before, veterans benefits is another way to supplement that cost. And then of course, I know we've talked about this before, Medicaid. That is another way to apply for a state benefit to help supplement the cost of that long-term care. So we have conversations, what are your assets and how best to structure you for long-term care. And then Josh, I don't know if you wanted to weigh in on the insurance, but that is another way to help pay for that.
All right, Josh, you get to weigh in on this.
Yeah, long-term care insurance is obviously something that is a great way to pay for long-term care expenses. Unfortunately, it's fairly expensive to buy. And the other unfortunate part is it can be difficult to qualify for.
Oh, really?
Yeah, because obviously the insurance company doesn't want unhealthy people because they want people, the insurance company wants people that probably aren't going to go to the nursing home. They want to weed out the unhealthy people and bring in the healthy people. So it can be hard to qualify for. So the key with long-term care insurance is to get it when you're a little bit younger, maybe in your mid-50s is kind of the sweet spot for that while you're still healthy. And then, figure out ways to pay for it. One of the other keys is, fitting that into your retirement budget. If you get a policy that you have to pay for forever, that can be a big expense in your retirement budget. So you can plan for that and do what's called a 10-pay, where you pay
10-pay?
10-pay.
Okay.
Where you only pay for it for 10 years and then it's paid in full, and you don't have to pay the premiums forever. So if you do that, say 55, and you retire at 65, then you don't have to fit that in your retirement budget.
Okay, but you're still covered by that policy.
You're covered, yeah, it's fully paid for, and you're covered, and you don't have to worry about them raising the rates on you, and you don't have to worry about paying that premium forever. It's paid for. You retire, it's paid for, you're done, you're ready to move on and be retired.
Should we pay attention to commercials that we see a lot from insurance companies about everybody's covered, there's no medical qualification? What does that mean?
Well,
or what are they really
that's
doing?
A lot of times you're thinking about like these final expense life insurance policies is what they're talking about there.